We saw home sales prices jump in Toronto and Ottawa in 2019, strong increases in activity over the prior year. But the strength's not extended across all parts of the housing market. The luxury real estate segment seeing the weakest sales in the group. So where are developers looking for opportunities? Joining us now for a closer look at that, Sam Mizrahi is president and founder of Mizrahi Developments. Good to see you again.
Likewise, nice to see you.
So it was an interesting year for a while there. While the Canadian housing market was running red hot, it was across all the segments. We did a lot of work on the higher end homes and the activity we're seeing there. What's behind this cooling of luxury?
I think the cooling of luxury comes in segments. It cools off for a couple of months and then it comes back again. So I don't see it as a long-term cooling off. You see it in very short-term spurts, and it goes with the immigration. So as we see the immigration flows coming into Canada and specifically into the GTA and other major cities, we start to see how those cycles work, and they're pretty much correlated.
Would that be a benefit that we would have? We've been discussing immigration earlier in the program today and the fact that it could be an overall economic boon for Canada over the United States, considering how many people we bring in to the country. I'm seeing headlines about condos in New York not moving. Is that an advantage we have over the Americans, our strong immigration?
It's our biggest advantage that has kept the real estate market buoyant in Canada over the U.S. is our immigration policy and the fact that Canada is seen as a incredible safe haven for families to immigrate and to start their lives and bring their kids. And we have the best education system, our healthcare system, our banking system, and just Canada's general value system. So it's a definite asset in terms of making the real estate market boom and to keep it buoyant that we've seen for the last 15 years over the U.S. I would say a large portion of that is the immigration.
Now, obviously, those are people who are coming to this country from elsewhere. They're starting lives, they're staying here, they're building roots. The concern over the past couple of years is that foreign investors who had no intention of living in Canada were buying up properties, some high-end properties, buying up condos. We bought in a lot of rules and regulations. Yeah. Has that trade pulled back a bit? Is it not as easy for foreign money now just to show up and park it in our real estate?
It's not because of the foreign tax that came in. Without a question, that had some impact on it. But again, generally, the real estate market that we found in Canada, the foreign investor is a smaller portion of that. The vast majority of investors that are in real estate, especially in the condominium, are actually immigrants who come to Canada and make Canada their residence. So they are foreigners in terms of immigration coming in, but they're not absentee foreigners where they're just buying assets and then not actually living in Canada.
Now, Ottawa was one of the surprise markets for people who don't follow it carefully in terms of strength last year. I believe you have some entry points into Ottawa. What's the attraction there beyond the strong year that we just had?
We had an incredibly strong year in Ottawa. We have a super high luxury building, which is the first of its kind in Ottawa being developed now, and it's under construction in Westboro. And we've seen that the luxury market in Ottawa is one that has depth to it, and the market there wants it. It was not being developed or built for a number of years, and when we came into the market, we saw that there is depth, and the project's done extremely well.
How are we defining luxury these days in Canada? Does it depend on the market? Is it a price point thing? Is it a square footage and amenities kind of thing?
Luxury is defined really in two ways. One, it's the exclusivity in terms of the unit and the customization with the unit today, and the location. So I would say the luxury market is really defined by its geographical location in terms of the amenities and general neighborhood in terms of that, coupled with specifically the exclusivity of the building and the customization that you can actually customize your unit.
All right, you talk about Tony neighborhoods in this city. Obviously, Yonge and Bloor is sort of that entry point to some of the more expensive real estate that we have, and you have a big project there. Tell me about how that's going.
The one's going extremely well. We're 100% fully leased. We're now approximately 80% pre-sold, and we just got to grade on it. So the building's coming out of the ground now, and all the underground's completed and finished. And it's the first super tall building in Canada. It'll be the tallest building in Canada that's under construction. And architecturally, it's very important for Canada because this building at the one put it on the international map in terms of a secondary focal point to the CN Tower. That really, since the 70s, we haven't done anything on that magnitude in Canada. So it's very important in terms of just showing that Canada's now joined the international cities in terms of having the first super tall building that's being built here.
The last time I talked to you, I actually visited you at the site. I can't remember if it was last year or the year before when it was still a hole in the ground. Great that it's now at grade. I know there's going to be mixed uses there, not only residential, but commercial, retail. A lot of, I guess, speculation over several years now that Apple would want to put a nice, big, gleaming Apple store at Yonge and Bloor. Now some people are speculating they're going to put it in your building. Are they?
Well, I can't comment on the confidentiality of our tenants, but I can speak that we have fully leased the building. We have a very special world-class tenant that's going in there as the anchor, and they'll be making their announcement soon. So I'm sure it'll come to no surprise when the announcement comes out as to who that tenant is. But it's a world-class international tenant, and this is a super flagship store. Nothing like this in Canada.
Okay, so that'll be an interesting one that we'll watch for. Apparently, we won't be surprised when we hear the name. In terms of the Toronto market, obviously, it seemed to have found its footing quite strongly after the setbacks. And now we're hearing, well, I mean, we saw it, Finance Minister Bill Morneau has been tasked by his job, the Prime Minister, say, why don't you take a look at that stress test? Why don't you think about perhaps making it a little more dynamic, maybe a little more flexible? Where do you think they might be headed with that? And should they tamper with it?
I think they should make it more flexible. I think that the Canadian market is very stable. I think Canadians in general are much more conservative in their borrowing versus the rest of the world. And we've demonstrated that over decades, that responsibility with our banking system and just within Canada itself. And I think that it will help many new entry buyers in terms of first-time home buyers and so forth enter into home ownership, which is very important. So I'm looking forward to them looking at sort of augmenting that stress test and allowing a little bit more flexibility into it, which I think will be great for the economy and great for homeowners.
The flexibility, do you think it'll be, again, I guess the criticism of housing policy in this country, it's always, if it comes from Ottawa, it's one size fit all, but they seem to have some appetite with the first-time home buyer incentive to start looking at geographies and say, okay, we'll give Toronto, Victoria, and Vancouver a break. If they alter the stress test, does Toronto really need a break? Wouldn't it be more like Calgary?
Well, I think every sector is unique, and every sector needs some support. Whether it's Calgary or Toronto, they have very different dynamics in their real estate in terms of what's required. But I think if you tailor something for each specific region and look at supporting that region with the financial engineering that's required to get people into homes, I think that's a win-all for everybody. I think everybody wins. So I'm a big supporter of that.
Always a pleasure to have you here. Thanks for joining us.
Likewise. Thank you very much.
Sam Mizrahi is the president and founder of Mizrahi Developments.